Hello, 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 hello. Hi all, and welcome to another edition of TraderCast YouTube Live. My name is Phil. I'll be your presenter today. We'll be talking about key trading levels and trading setups for popular markets. If you haven't seen this before and you're brand new to this channel, this is a little bit about myself. If you're looking for a community, check out TraderCast.com. If you're looking for the education, you'll find some of my courses on mytradingskills.com. Some of these courses are completely free, so sign up, check them out, and see how we teach. And if you like what we teach, and if you need more, let me know. Over the past 10 years, I had the privilege of speaking in front of various different industry events, and I managed to speak to loads of new people who are looking to learn about trading, and they are all going through the same process. They're all confused with certain things, with terminology, with how to analyze the market, how to time the market, how to manage the risk, and so on. It's not really that complicated, although it does take time and effort to learn. So big disclaimer here, if you are looking for trading signals, I'll be showing you some of the live trades that I have currently open, and trades that I had open before, and I'll be going into a market analysis. Basically what I'm trying to do here is I'm trying to provide you with a practical application of what I think a beginner trader should be able to do. I'm keeping this very, very simple, no indicators, just a very simple price action strategy, no news, nothing really complicated, and basically these are my opinions and experiences, not advice. Now we are talking about live trades. If you watched yesterday's session, you know I was long S&P from 42.85, and you saw me move my stop loss at break even and then above break even at 4,300. And I was telling you it's consolidating and so on, and then eventually what happened is the price kind of dipped lower and it went through 43.20, and I decided to get out at that point, and I didn't want to be in that trade anymore, so I'm happy with that. And if you watched yesterday's session, you also know I was looking at sterling dollar at 135.40. Now we cannot foresee kind of a geopolitical risk or escalation or anything like that. So I had a limit order at that time in the system, and that was triggered while I was asleep, and I got stopped out with a 50-point stop loss. So hey, it was a educated guess. It was a good level. It would have been a good level, but because markets are moving today based on something completely different than just technicals or key economic data or fundamentals. They're moving on a geopolitical escalation. They're moving on the escalation of geopolitical tensions in Ukraine. So now, let me show you where I am for today. I'm pretty much flat at the moment, but I'll go into indices, US indices very quickly, and I'll show you a few of those. We'll talk about gold, we'll talk about oil, and we will definitely talk about maybe a currency or two, but I'll try and keep this sweet and short again. So first things first, let's talk about S&P, and I'll show you where I am with that one. So that's area where I got out was, I'll show you that now, up here, 43. So this was support, 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 and then eventually when it started selling off, I decided to get out. This is 1 hourly time frame. So really the escalation of this selling pressure intensified from that moment on, and it carried on overnight. Now we have the escalation of geopolitical tension in Ukraine, which caused global equity markets to react. So Russian equity markets were down 40% at one point today. We will talk about crude oil. Crude oil is trading very close to $100 per barrel. We have massive breakout in gold. We have a massive breakout in European nat gas as well. At one point almost 30% on a day, and so these are unforeseen and unusually large moves and so on. So very difficult to trade this based on any technicals, because the market is basically reacting to the news which are provoking more fear, and therefore intelligent money, smart money, they are getting out of speculative investments, they're getting out of equities, and they're parking their money into safe haven of some sort. So in this case it will be gold or Swiss franc or something else, some kind of commodity like oil and so on. So what am I going to do today? What I'm going to do today is this. I'm looking at this pattern here. So this is S&P in 1 hourly. This pattern here is a holding pattern because we are coming fairly close to the US Open. US markets will be open in about 32 minutes from this point in time. And if they do, there are a couple of scenarios which can play out, okay? So the first scenario is that we could see a sell-off from here and then dip down to this area down here at 40.47 area, and then we could see another little bounce of that, a loss and end of day close below this area 40.47, 40.50 on S&P would be really bearish, potentially intensifying this selling pressure and pushing the S&P lower as well. The other scenario which could possibly happen today, we could see an attempt for the oversold bounce back at the open, because we are much lower than where we were at the close of yesterday. So if we see a rally at the open and a push and a break above these current highs, so these highs here at 41.57, it wouldn't be unusual to see something like this: resistance, 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 breakout resistance, a retest, and then potentially oversold bounce back. So how far this oversold bounce back goes, it's guessing at the moment. But there's a big likelihood that this area up here at 42.20 would invite sellers again. So if we do see a rally to this area, then potentially we could see another leg lower from there. In that case, I would likely be looking to short here with the stop slightly above, with a view to take profits down here again. So either counter trend scalp, intraday scalp at the open when the market's open, to see how they react for a kind of oversold bounce back with a very tight stop below, and a potential take profit at 41.57, possibly even 4,200, 4,220. If that happens, that will be a big oversold bounce back. Or alternatively short sell there with a stop and a larger take profit at the bottom. At the moment, I'm just waiting here. Nothing open at the moment. Just looking at these markets and waiting for some kind of trigger. The other thing that I want to talk to you about very briefly is Nasdaq, and Nasdaq is in a bearish territory at the moment. So let me just see if I'm streaming through here as well. At the moment, I'm just waiting here. Nothing. Oh, brilliant. Okay. Yeah. So in relation to Nasdaq appears to be more bearish than other indices, because this definitely looks like a triple top and a big selling pressure, energy build up, energy. If you watch some of the previous sessions that I did last week and so on, I was referring to this as an energy buildup, energy buildup, energy buildup, and they normally precede explosive breakouts, and really you never know what's going to trigger it, but this was the trigger. And then you saw a loss of support, retest, retest, and then off it goes again. So what would I like to do with Nasdaq? Well, at the moment I can't really buy Nasdaq. I can only short sell Nasdaq because the overall prevailing trends in multiple time frames, it's daily, in 4 hourly, hourly, is bearish. So therefore it's downtrending. And in downtrending markets, as one of the rules, the only thing that we can do is we can look for a rally for another leg lower, so something like this. Okay, so the level which I'm paying attention to closely in relation to Nasdaq is at 13,590. So this area here, this was the previous low here from the 22nd of February, and if you're brand new, this is referred to as a resistance. It was support before, it was support before, support before. So it was our floor. The price was testing it and bouncing, testing it and bouncing, testing it and bouncing of that. So once you lose that support, then it becomes resistance. That basically becomes a ceiling. So if we see an oversold rally from these current levels into that area, I would be a short seller at 13,590 with a stop at 13,725. So this would be the amount of risk that I would look to take, and then I would be looking to take profit down here towards 13,000 again. So this area here would be my take profit. So from the risk to reward ratio point of view, I have a multiple amounts of risk for the potential take profit that I'm expecting on this setup. Yet again, I would get in on this trade if I get a confirmation, and that confirmation should be a combination of candles that look like this. So these 3 candles here, maybe candles like this, candles that look like these 3 candles here. They're known as evening star reversal. Maybe a shooting star up here, very similar to this one. Okay, maybe larger wick and a bigger body up here. So that kind of stuff. I would be looking for a green candle, green candle, green candle, rally, 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 and then a rejection and a sell. So that's where I am. I might be looking to put an order on that, but let me just see. 13,590. 590. Let's just do that for now. I might remove it later. I'll see how this works out, but I might remove it later. But that's where I am with Nasdaq. It's quite bearish, and it does look like an index that's under pressure for various different reasons. Lots of economists and traders are now looking at the current geopolitical risk that's driving the market reaction, and they are wondering how will that impact central banks. So yet again, if you're brand new and you don't know what I mean, is don't worry, it's not complicated. But central banks were planning to start hiking interest rates to slow down the overheating economy and control the inflation. Inflation was going higher, and by doing so, they are strengthening the currency. So if Federal Reserve is planning to hike rates in March, which is what everybody's expecting, that normally means that US dollar should be stronger than other currencies where central banks are not doing the same thing. Okay, so now lots of analysts and traders are wondering, will that hike happen as planned in March, or will the current events postpone it and cause central bankers to rethink the pace of monetary policy tightening and interest rate hikes? So that brings me to the commodities and currencies. So first things first, let's talk about gold. We had a massive breakout higher in gold. Okay, let me just go here, and I am looking at this now from the shorter term point of view. So this is starting to do something. Okay, maybe I'll go long here on S&P. And let me just put my stop tight. Okay, this is it's a live trade now, so I'll show you where I am in a minute. I've just decided to go long S&P, very speculatively long, completely counter trend. But let's see if I get a push to something like this. So even this many points I would be happy with. Okay, so retest of these highs from 41.30 up to maybe 41.54. If I'm wrong, I'll be stopped out very quickly at 41.20. So I have 10 points of risk here. If I'm wrong, I'll be proven wrong very quickly. Completely speculative, counter trend, and actually I'll just show you that straight away. I'll show you that straight away, and then we can go and talk about gold and other stuff as well. The joys of live trading and scalping. So here we go. This is my S&P. I am currently long. You can see where I entered at 41.30. My stop is just down here at 41.20, just there, and I would like to take profits up here at 41.70. My ultimate limit order is much higher now, but I'll likely take either partial profits or all profits up here if the price hits this level up here, 41.65, 41.70 thereabout. And you can see there's a small P&L here flicking between gains and losses, but let's see. It's a scalp, it's a short-term trade. Let's see how this plays out. I'll keep you informed. If I get stopped out, I'll let you know. Now, this is gold, and what I was looking to do with gold, we have another message there, so well, thank you. Hi all. Where am I now? So gold, massive breakout higher in gold. If you remember, yesterday we were looking at gold being quite bullish and so on, and now you're seeing this massive breakout higher. So where to for gold now? Well, going with the same logic, this looks like exaggerated, exuberant move higher. This is the 4-hourly time frame. If I show you the weekly or daily time frames for gold, you will see that from early 2020 we had gold at $2,030 per troy ounce, and then subsequently we had this corrective pullback lower. So using the same logic, that level now is a level that could be referenced as a resistance. So if we see either a corrective pullback for a bit and then a rally from here, that would be an option. So if we see equities rally, maybe some decrease in geopolitical risk, or maybe some announcement that triggers the market's reaction that this current escalation might not impact, it might not have systematic impact across global markets and so on as it did initial shock. You might see a sell-off in gold and then rally, oversold, bounce back in equities. So pullback to this area down here at 1917, 1920 would likely incentivize buyers to come in and look to buy with a stop at 1910 or 1900 at the low. So possibly $10 to $20 in price of the stop. So this would be the risk. And then they would expect a gradual move higher and then retest of this area up here towards 2000. It's a nice and round number, and it's also that previous significant high that could be retested as well. Other than that, if we see a continuous rally from the current levels, it's quite likely that many other people would be looking to take profit up here. If they're already in this trade and they're seeing continuation to the upside, it's quite likely that we could see a bit of a profit taking around this area, 2000, 2030, which could then cause a little bit of a correction. So I have nothing in gold at the moment. I'm completely flat. And I am waiting for some sort of setup here as well. Just to give you the indication of my trade, I'm currently underwater with my trade. I'm making a loss here. Okay, so I went counter trend. I was trying to catch the falling knife. I still think it's okay, as long as we don't lose these lows down here. But I'm currently holding this as a losing trade, but my stop loss is at the appropriate level, so I'm really happy with it. Okay, let me just show you where I am. So this is the trade. I moved my limit order lower, but here we go. So this was the initial entry, and this is the stop of about 10-11 points. So I'm happy with that, and I'm looking at this area up here and then this area up here, 41.70, for a potential take profit. This would be a intraday trade. I might, if that happens and we see a spike higher, then a next level would be at 41.90, which I would also be considering as a take profit area. But that's where I am with this trade. I'm keeping it open, and I'll keep you informed about what I'm going to do with it. Okay, the other thing that we should be talking about, because loads of people are saying, hey, we didn't cover gold, or sorry, crude oil. So let's cover crude oil. And a crude oil is hopping. Here we go. Massive breakout higher, guys. If you remember, I was looking at pullback to $89 to buy yesterday. So I was thinking a corrective pullback for another fairly safe entry with this trade. But instead of a pullback, we saw a sideways consolidation and then a breakout higher. So geopolitical tensions, crude oil goes higher. Now this area here, $100 is this is WTI crude contract. This is the contract that's traded in US, so that reached 100. If you are trading Brent, which is UK listed, UK traded crude contract, that went above 100 early on today. And actually I'll tell you where we are with that. So Brent crude is just above 100 101 thereabout, and WTI is at 98.50. So there's a slight difference between the two contracts, but what you're seeing here is 98.90. So there's a different price because the different brokers providing different price, and also the contracts. But $100, a psychologically important level for crude oil. So some profit taking around $100 is not, it's not unusual. So something like this happens. Now, what would I like to do with oil? I don't really want to be involved with oil at these levels. I think if I was looking to buy this from the price action breakout point of view, although technically this appears to be a good setup. And for those of you who understand price action, and those of you who watched previous live trading broadcasts and so on, you know that I have a tendency to react to this type of setups a lot. They're called bullish continuation patterns. They're either referred to as symmetrical triangles or pennants in some cases. And you have 1, 2, 3 touches at a low, 1, 2, 3 touches at a high, and a breakout. And the way they play out is they break out in the direction of the prevailing trend, and that prevailing trend is to the upside. And the way the people would trade them is they would trade the widest point of this consolidation, extended at the breakout, and then they would take profit up here. So if they the other way to trade them as well is if we see a small breakout and then a little retest, so something like this, they would enter again for another leg higher up there. So they would also react to that. But I'm not really tempted to do that, because I think we are at overextended levels. I wouldn't short oil at the moment, but I'm waiting for a better price, and that might be around 95.70 area. So somewhere down here. I don't have the order at the moment. I don't have anything decided, but maybe something like that. Maybe something like that with crude oil. Okay. Let me just cover a currency or two, and then we can stop for today. So where am I now? I'll show you my S&P trade. It's still fluctuating between winning and losing, small gains, small losses. They're unrealized. This is open trade, so they're not profits or losses. They're basically just a running P&L. But that's where I am. I'm looking for a short squeeze, oversold bounce back. I think loads of people are coming to their trading desks now in US and saying, wow, they're seeing a massive gap from where it closed yesterday to where it's open today. Futures opened an hour ago, almost. And the real cash markets will open in about 9 minutes time from now, and then we'll see a massive volatility here again. So I was looking for a little bit of a oversold bounce back before the markets open. Let's see if I get it. If not, I'll let you know, but that's where I am with this particular trade. The last thing that I want to talk to you about for today is, hi guys, hi. You looking at anything, guys? Let's go and check out a you. Where am I now? Cable. This is what happened with cable, guys. This is, if you remember, I was looking at this 135.40 level yesterday. I was looking for a pullback to that level. This is a setup from yesterday. So this was a setup from yesterday. We were up here and I was looking for a pullback and then a rally from there. And the reason for that was we have this rising support trend line, also different things from a technical point of view. And I had my limit order. So eventually the price did go there. There was a small pause. There was a little pause here. And then off it goes. 1, 2, 3. So we have, you know, substantial amount of selling now. This is hourly, so you have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. We have loads of red candles pushing lower, pushing lower, pushing lower. And I think I'm gonna get stopped out now on my trade fairly soon, or I will get out. So I'm just keeping an eye on this S&P trade. So I got filled and my stop was down here, 35, one spot 35. This was the amount of risk that I took, about 40 points. So I lost about 40 points in this trade. Not the nicest thing, but hey, happens. Not every single trade is the winning trade. You have losing trades as well. That's a process of trading. It's a normal occurrence if you're trading financial markets. If every single one of your trades is the winning trades, there must be something wrong. Not every single trade is a winning trade. The only difference between the average trader or trader who is not consistent and a good trader is that good traders tend to cut their losses very quickly, and like what I'm going to do shortly with my S&P. So you cut your losing trades quickly, and nearly there, and you let your winning trades run. Come on. This is what happened. This was the basic premise, that we'll see a push higher. That didn't happen. We have 4 minutes to the open. We have 4 minutes to the open. And it's not doing that, so I'm waiting for this candle to tell me. So this is the 5-minute candle. Come on. Either pick me up or turn around. That was a stupid trade then. Okay. I'm out. Yeah, I've stopped out now. So here we go. Nothing on this trade. I was stopped out with a loss of 10 points. 10 points on this trade. I got in at 41.30 and I got stopped out just now 41.19 half or there, just below 41.20. So that was a losing trade. It didn't work out. Let's see. Let's go for the next one. Let's go for the next one. I'll see how the markets react when they open. We have 2 minutes. We have 2 minutes before US markets open, and then we'll see how this reacts. But so far, this was a losing trade. I'll update it on the sheet for tomorrow's broadcast. Okay, is there anything else? Hans saying, do you trade Dow? Hi Hans. Welcome. I'll cover the Dow for you straight away. A very similar situation with hi Hans. Very similar situation. Where are you based, Hans? Do you mind me asking? So we are at the open now. We are at the open now. So look, very little movement here with gold and oil. Dow is basing. Look, it's very similar situation to searching for live trading. Okay. Very similar situation to what we talked about before. This looks like a shoulder, head and shoulder, and if you look at this type of pattern, preceded 2008 market crash as well, but we had that in the past as well, to a smaller degree, and they always preceded a bit of a kind of corrective pullback. There's another one here, shoulder, head and shoulder, and a pullback and so on. But this one looks really exaggerated and big, and the big level was this neckline here of this topping head and shoulder pattern. So what would I do with the Dow at the moment? Well, today very difficult to do anything based on technicals, unless you are scalping like what I've tried to do with S&P. You're looking for an oversold bounce back at the open. And you're looking to take a few points out of this trade, but you're risking very little. So if you're risking 10 points in a trade, you want to get out with 20, 25 and walk away. And anything more serious than that, anything that's based on a kind of position holding, something that you would enter and hold for a number of hours, days or weeks, might not be the best strategy at the moment, because the markets are reacting to this escalation in geopolitical risk. So what? Oh, you're based in Netherlands. Okay, well, hopefully you're safe and well. So what I would like to do with the Dow is, if we do see an oversold bounce back from these lows, into this area up here, this might not happen today, then that could potentially be another leg triggering a sell-off to the downside. now I'm looking at this S&P and I'm thinking I should have held this my position, and why did I keep my stop where it is and that kind of stuff. So that's where the Dow is. From the intraday point of view, it's very short term, very short term, and the markets can turn very quickly. So if you go to 4 hourly, so let me just change this. Okay, and I'll reuse these two. So if you go to 4 hourly, it's downtrending. So yet again, the same reason for a very similar level. So you have high, lower high, lower high, lower high, lower high. So if the price goes into that kind of trend line area, it brings you to that level. You can also use your fib from here to here, and this is that nice 50 and 61.8 fib retracement zone as well. So there's more things pointing to this area here as an area of interest. Sorry, I'm just looking at this S&P and it's going higher. It's going the way I wanted it to go, but I'm not with it. Okay, so from the intraday point of view, so if that's your support down here, and when the US markets open, if we see a bit of a rally from here, then I would be paying attention to the existence of these highs. Very similar to what we had with S&P. So either highs like this, or just horizontal kind of highs there, pointing to, actually I'll be more precise, 32,570. So that's the area then of interest. So if we see a breakout above that level and then possibly a little retest, something like this, that could trigger a bit of a short squeeze, push higher. So this should be a blue. Otherwise, if we see a rally into this area and then a rejection, then this sideways consolidation could happen going forward for a while. So that's where I am with Dow. If you're trying to buy Dow at the moment, you're trying to catch a falling knife, which is what I was trying to do with S&P, and that backfired. If you're shorting Dow at the moment, you might be shorting at the wrong level, because the big sell-off already preceded this sideways consolidation. So another trigger is required, some further escalation, some further trigger of fear is required for another leg lower. Or from a technical point of view, if I want to speak as plainly as I possibly can, a sell-off and an end of day close below these lows down here would then trigger another leg lower. So that's where we are with the Dow. How far can it go? Well, the next level of interest could be down here at 31,100, possibly even 31,000 to the downside. Then below that, we have this area down here at 29,750. So that'll be a really big corrective pullback lower. It might not happen in the next hour or so, but this is the weekly time frame. So that's where I am with the Dow. Okay, that's where I am with the Dow. I feel that it wouldn't be unusual to see a potential spike higher, and at least an attempt to create an oversold bounce back for today. That's what I'm thinking. I might be looking to do something else again with the S&P. Okay, well, that's where I am today. This was probably a little bit a longer session than I wanted it to be. In the meantime, stay safe, happy trading. I'll be back with you tomorrow at the normal time. So Stay safe and good luck, and I'll speak to you all tomorrow. Bye for now. Thank you for watching. Thanks.